Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? Well, we're having a down day. The Dow's down about 400. NASDAQ's down about 100. Now, a lot of people think that this rally is the start of a new bull rally. That could not be farther from the truth, in my opinion. Now, I think this is just a short squeeze, and I think this short squeeze has come to an end. I think it's come to an end today. We started the day up, right? And we reversed and we've come down now. Now we're up, about 4 or 5% for the year, which is a nice rally. Now, if you continue at that pace, heck, we'd close the year out up 50% for the year. And I don't think that's going to happen, right? That's kind of funny. But anyways, I think that we've started the end of the short squeeze. There's a lot of turmoil ahead for the market. We have the debt ceiling to deal with. We have all these layoffs to deal with. Microsoft just came out and said they're laying off 10,000 people, 5% of the workforce. So they're getting layoffs, and I think we're going into a recession. This is going to play havoc with the market. I think the downtrend is still intact. I think we have farther to go on the downside. Of course, your take could be different. We'll see how this all plays out. But I do not think this is the start of a new bull market. I think the bear market's intact, and I think we're still going to head lower. Just my opinion. Let's move over to the real estate market, because that always cracks me up, right? Now, I love realtors. I am a realtor. I'm a real estate broker. But this is my favorite, right? So I was listening to these podcasts from different realtors, and well, some of them are saying that we've hit the bottom. This is the time to buy because the next surge in house prices is already starting. Really? The next surge? I don't think so. Look, we're down about 10%, right? But the next surge is very far off. We got a lot farther to drop. Now, the reasoning behind this, it just cracks me up. You see, what this realtor was telling people is that now is the time to buy. And the reason is because no one else is buying. Look, you will be the only idiot out shopping in the marketplace. You're going to have complete run of the market. You'll be the only one putting in offers. You see, you could be that person to run out and buy a house now because we've hit bottom, right? Hurry up, get in, the water's warm. Look, this market's going a lot lower. It may not be going lower in your area, but most areas are still coming down. Now, this realtor says that, yes, it's taking a little longer for a house to sell right now, but we're still up year over year. Now, year over year, that may be true because think about, what are we in? The month of January right now. When did the interest rates spike higher? It was the month of February where the Fed started to raise the rates, where we went from 3% on mortgages to 7%. So year over year, we haven't even seen that yet. And where the real drop started to take effect was actually in May and June. So yeah, they got a point. Year over year, a lot of areas are still above water. But if you wait another 2 months, you're not going to be able to say year over year is above water, because just since June, we've dropped 10, 15%. In many areas, some as far as 20% already. Now, that is a downward pattern, and I do not think we are close to hitting the bottom yet. But now they're saying that, there's not going to be any new inventory coming out, right? And everybody's got that argument because people got locked in at this 3% rate, and when the rates are up at 6.5%, now they're not going to sell their house to get to that 6.5%, so there's not going to be any new inventory. Well, I tend to beg to differ. I think the inventory is going to be coming from forced selling. Now, this particular realtor was saying that there's not going to be any forced selling. There's not going to be any foreclosures. Now, the news, they'll they'll report right now that foreclosures have spiked up 150% year over year. And I agree that number's nothing because they're started down here. We haven't been able to foreclose on people for the last 2 or 3 years because they got this thing forbearance going on. They made foreclosures illegal, really, right? Which is very unconstitutional, but that's a whole another video to do. But anyways, we haven't had any foreclosures. So this spike up of 150% is coming from a very low number. Look, I will be the first to admit that we're not even halfway back to pre-pandemic numbers in the foreclosure. That's why I know there's going to be a lot more foreclosures coming. But this realtor is saying no, there's not going to be more foreclosures coming because everybody has all this equity in their house. So if they get in trouble, they can go out and sell their house. Now that's true. Some people do have equity left. Now, not if you bought in just the last year. You're probably already underwater because you put 5% down, house has gone down 10%, you have 5% of negative equity. But this realtor is saying that most people, if they get in financial trouble, which I believe a lot of them will, for example, the 10,000 people that Microsoft's laying off, I bet they're going to have some financial problems. I bet some of those people are not going to be able to make their mortgage payment. Now, this is just common sense, right? I don't know. I mean, if you get laid off and you don't have income, well, it's going to be tough to make that mortgage payment. But they're saying that if they get in trouble, they'll be able to put the house on the market in a normal sale. Well, that is still inventory coming onto the market, right? That's still inventory coming on. Yes, it's not forced on, but it kind of is because they lost their job and they kind of have to sell their house because they can't make the mortgage. So it is kind of a forced sale, even though it's not a foreclosure sale. But I want to talk today about, I want to talk a little bit about this equity everybody's talking about. This massive equity that everybody has. Now I will admit there's trillions and trillions of dollars in equity in the U.S. housing market. It's over 20 trillion, probably close to $25 trillion of equity. It's the most it's ever been because the bubble's the biggest it's ever been. Now people are saying we're not in a bubble because they have all this equity. Look at this equity is going to get wiped out. I'm telling you, it's all going to go away to where there's no equity. Look at trillions and trillions of dollars are going to be wiped out in purchasing power. Purchasing power is going to dwindle as your house price goes down. You can't go out and get that HELOC on the house to give you more purchasing power to go out and buy those new cars. And the car market is in turmoil. I might talk about that in another video, but it is a disaster area. I mean, like 1 out of 4 people are behind on their car payment, right? 1 out of 4. That's crazy. So that's just a precursor to what's going to happen in the housing market. Okay, so in the housing market in 2008, that was that big subprime mess, and the houses, they came down about 34%. Now, a lot of people think that was because everybody was getting foreclosed upon. Look, there was, at the beginning of that crisis, there was about 1.5% would be defaulting on their mortgage payment, about 1.5%. And that number jumped up from 1.5% to 4.5%. 1.5% defaulting on their mortgages jumped up to 4.5%. A lot of people think it went a lot higher than that. It really did. You see houses, they're on the margin. When you go from 1.5% to 4.5% default rate, granted, that's 3 times. The default rate did triple, but it only went up to 4.5% of the people were defaulting on their mortgages. And that caused a 34% drop. Now, my opinion is we're about 1.5% right now in default. 1.5 million people are behind on their mortgages. They're behind. They're delinquent. They're, 30, 60, 90 days delinquent. 1.5 million people are in jeopardy of being foreclosed upon right now in this very hot market. Now, granted, a lot of those will go to market. They'll end up selling their property and they won't go through the whole foreclosure process because they'll get out out before their equity is completely wiped out. But a lot of people will wait till they're underwater. When they get underwater, those foreclosures really start to spike up. Because when you're underwater, look at your house, your next door neighbor's house just sold for, what, $100,000 less than you owe on your house. Are you going to keep making your mortgage payment? A lot of people tell me they will. And that's great because we love you guys. We call you guys, well, the bag holders. And we need more bag holders, right? Keep the houses propped up there. But look at 1.5% to 4.5% brought the market down 34%. Now, I say this time we're going to go over 5% default rate, maybe 6 or 7, 8%. And that's going to take us down easily 50%. And now why do I say the default rate's going to be that high? Well, I don't think that's that high. Look at Microsoft's laying off 5% of the workforce. Every day some new company is laying off 5% of the workforce. The default rate on home mortgages can definitely go above 5% this time around. This crisis, because the bubble's bigger, it's going to be a bigger popping sound. You see, in 2008, it was like this, and it popped, but it didn't fully deflate because they pumped in more money. They pumped in more money. Trillions and trillions of dollars were being printed, so they pumped it back up, and they blew it up bigger. And that's where we're at today. This bubble's bigger now. So when it pops, it's going to make a bigger sound. You're probably going to hear this sound all around the world because this is just not a problem in the United States. This is a problem that is all around the world. It is a worldwide bubble. It's an everything bubble. Look at the stock market. Air's already coming out of it. Yeah, we got that 4% rally for this beginning this year, but I'm telling you, the more air is going to come out of that market also. But the housing market is going to lead the way down. It's where it's the biggest bubble in world history, and it's worldwide, and it's never been bigger, and they're not going to be able to prop it up this time. So when you hear that pop, it's going to be heard around the world. And it is a race to the bottom right now. Look at Billy Bob got out up here, but your next door neighbor, he's trying to get out here, but you're going to have to come down and get underneath him if you want to sell your house because there's just not any buyers. Now, maybe you're one of those buyers where you believe that we've hit bottom, where you believe the next surge is coming. Well, the reason they say that next surge is coming, this is good, right? All right. The reason they say that next surge is coming because searches on the internet for homes have picked up. It hit a low in November and it's ticked up here in January. Now, people are searching, but they're searching for a different reason. They're watching the train crash. When you see a train wreck, it's hard to look away. You're going to look to see what happened. That train is being derailed. There's a crash. It's a train wreck we got right now. So yes, people are searching on the internet, seeing what home prices are doing because there's a tick up in the searches does not mean there's a tick up in the sales. Does not mean that prices are going to surge again. No matter what these realtors, that whatever they make up, don't listen to them. Look at, I'm a real estate broker. I'm supposed to be telling you this is a great time to buy. No, it's not. Probably the worst time in history. We got high interest rates along with high prices. Something's going to give. Look at people's income. Maybe your income's going to double. Maybe in your area, everybody's making twice as much money now, so prices won't come down. But I don't think that's what's going to happen. I think the prices are going to come down. I don't think your income's going to surge. Not 100%. Look at real income has been coming down every month for the last 2 years. The reason it's been coming down is because it hasn't been keeping up with the cost of inflation. So real income is actually crashing lower, which means people don't have money to go make their mortgage payments, and you're going to see the foreclosures coming on. You're going to see the forced selling. These realtors, I love them. I love them. I do. I'm a realtor, but they're starving out there. They're starving out there. They want to sell you a house any way they can. So if they're telling you that the next surge is coming because people are searching online more, just get a good laugh out of it. The realtors are just trying to make money. Look at, they're all starving. They're leading the bankruptcies right now. If you go talk to a bankruptcy attorney, their number one client is real estate agents. Real estate agents are the number one client for bankruptcy attorneys. They can't pay their rent on their buildings right now. You see these big buildings, the brick and mortar that real estate agents have, 33% are not making their their rent payments. They're going to go out of business. Yeah, right now it's about 1,700,000 agents, but it's going to drop down to about 1,200,000. We're going to lose 500,000 of them. And I don't mind that because it gets rid of my competition when this market will rebound. There will be opportunities, but take this year off. Wait till 2024. If you like this stuff, give me the thumbs up. I'm Tall Mike. Get out there, everybody. Have a great Wednesday. We'll talk again soon. Bye-bye now.